Here we go. Welcome back, everybody, to another episode of the Steady Wealth Podcast. Serge Berger here, and Brendan by now is actually back by popular demand. I think the third time Brendan is back on the show. We have had some great conversations the past couple times, and now I think sort of the thesis that we've been talking about is starting to hit the main street wires. Brendan, first of all, how you doing?
I'm doing great, Serge. It's great to be back, and kudos to you. You've done I think a great service to your subscribers for highlighting a rally that is out of sight, out of mind, and certainly the Western media is not speaking about. And so that makes me very constructive on our China investments because of the lack of media coverage in a positive way, the lack of flows, quite candidly, in the space. And that's all dry powder. Hopefully that comes back off the sidelines into the space.
Let's start there. And I should quickly mention Brendan here, and obviously from Crane Shares. They run a whole bunch of popular ETFs, some of them focusing on China, like KWeb, and so on and so forth. And when you talk to a lot of global investors as well, right? Maybe let's start there. I know you travel to Asia. What's the view there on, let's say, investing in China versus, let's say, what you hear stateside?
Yeah, I mean, I think listen, the last 2021, 22, 23, and somewhat in 2024 was tough times in the China equity business, and
Yeah.
really that last China bull was slaughtered in January of 2024 when you had this equity derivative induced meltdown in China and Hong Kong. And there's been some policy errors from the government, but it's against this backdrop of 15 years of the S&P 500 is up, call it like 1,100% from the GFC low, and just non-U.S. equities, all country, world, ex-U.S. is not even up one third of that. And so for institutions, 15 years, that's 60 quarterly investment committee meetings, talking to your trustees, your board, or opening your brokerage statement and staying diversified. I think there's been a global capitulation, and everyone is, in my opinion, is way overweight U.S. equities, just reinforced by 15 years of outperformance, aided and abetted by a very strong dollar, which is up 45% since DXY, the U.S. dollar index. It's up 45% since it bottomed in April of 2011. So just this, you've got this huge tailwind for U.S. stocks just because they're in U.S. dollars. And I just think, there's signs of this market regime change coming. And I'm not rooting against U.S. equities. I'm just saying, why wouldn't you just take a smidge of those profits and put it in cheap China?
Well, as you know, typically and sadly, the investors have to endure some pain first before they kind of wake up to things and maybe make a change. I would also say that if you're an institutional investors, which you were alluding to before, right? You think about the investment committee meetings, the quarterly ones, like it's now been tattooed on their hands that you need to be in the Max 7 stocks, and there's no reason not to be Max 7 stock. It may not should be everything that your entire endowment fund in there, right? But I think a lot of people are still scared to move away from those and from those names, even just a little bit, because they've worked so well. So it's like the herd kind of mentality. And after how many quarters it's been, as you say, like it's kind of understandable to some extent. But I'm increasingly concerned about I've been very concerned about the concentration for a long time. So it's nothing new.
Yeah.
At what point do they wake up, right? Because I'm looking at my screen here. European equities, just looking at the DAX, I know that's not all encompassing, up 16% on the
Yep.
year. The Hang Seng up 16% on the year. You know that better than I do. The S&P's down. The Nasdaq's down 3. As of this recording, obviously this could change by the time people watch this. when do people wake up? Is it Nvidia, by the way, as we said, is now at the same level as of
Hmm.
this recording where it was in May of 24. That's not quite a year of nothing,
Yeah.
and people don't seem to care much. What's the break? Where's the breaking point, if we can call it that?
I mean, I think performance solves a lot of problems, and I think most investors would say, for us, our flagship strategy in China internet, we're up nearly 60% since this bottom last January, and that's more than double the return of the S&P 500 or the Nasdaq 100, and no one knows or cares because it's just out of sight, out of mind, and I think a factor is the geopolitical narrative,
Yeah.
and I really do believe that when Donald Trump announces that he's going to go to China to do a trade deal with President Xi, that geopolitical constraint that's kept a lot of particularly U.S. institutions from coming back in. I mean, if you're a CFA or an MBA, it's just buy low, sell high, and the head of Norges Bank, the Norwegian sovereign wealth fund at Davos, said investing is simple: buy low, sell high, and he was like, I'm selling U.S. equities and buying China. And for a lot of U.S. investors, the geopolitical narrative is preventing that, and I think that constraint goes away. And sure, Trump is going to negotiate hard. I mean, that's a lot of the rhetoric we're seeing. But I think ultimately China will do a deal. But regardless, the world's second largest economy is stimulating. I mean, it's just that simple. And yeah, that's it.
Actually, I'd love to go down that road a little bit more, because that's where it gets really. Last time we talked about, by the way, you talked about. I think the first time we came on, we started having this big rally in Chinese stocks. And the second time you came on, we were just kind of explaining what just happened so people understood what happened. And then we talked about the next leg, and that one is now taking place. You talk about stimulus, and let's talk about China here. I'd love to hear what you think about there, because we haven't really, I guess, on the surface seen that much more stimulus. What people I think also don't see is, like, for example, Europe right now, just as a side note,
Mm-hmm.
I mean, they just announced like they're planning to put aside 800 billion euros to basically put their defense, put a defense back on the field.
Yep.
That's stimulative, So, but what about China? Where are they at?
Yeah, it's very similar in that they really want to raise domestic consumption, and they're doing that through subsidies. That in 2024 they gave people 150 billion RMB for auto, which includes EV and hybrid, but also home appliance trade-ins. They've doubled that for 2025 to 300 billion RMB, and they're including home electronics, which includes mobile phones, tablets, smartwatches. But it's very interesting. Out of this National People's Congress, they've actually said there's more to come, and they've said that there's a second stimulus plan that will be announced soon that is separate. And so we think they're doing a lot more to raise domestic consumption. The real elephant in the room for China is the real estate crisis, and you're starting to see. I think that's why China does a deal with Trump, is so that they can really pivot. But they actually nationalized a state-owned enterprise that's a property developer called Vanke. Just in kind of mid-February, the Shenzhen government took it over, and now there's kind of talk about, do they actually use that the money that the government has set aside to stabilize real estate? Do they go in and buy inventory? I mean, the government just come in and basically remove that, and to try to get real estate prices, because the importance of real estate is that's people's retirement funds in China, and it's been decimated by the collapse in real estate prices. And that's why you're seeing this major shift from the government starting last September. But I think there's a lot more coming, and we're seeing the tea leaves out there, Serge. It's just for a lot of people, it's just been so out of sight, out of mind. They're just not even paying attention.
Well, and if you think, and this is great insight, guys. By the way, if you hopefully, Brendan really has some really good insight here. I would also point out that as we came into or just after the election, in fact, and I have people who told me this, and there's people on TV who said this. I remember in November and December, you couldn't turn on television without some mutual fund saying, "Oh," or some fund saying, "Oh, we are getting all out of international stocks because now it's Trump, it's only U.S. stocks." And guess what happened? Right? Just to give you the numbers quickly. Again, this changes depending on when you watch this. The the S&P 500 is now down for the year. The DAX is up actually 20% year to date. KWeb is up 28% year to date as I'm looking at this right now. That's one of your ETFs, China Internet ETF. The FXI is up 22%. So basically the exact opposite happened of what people were thinking. What it's hard to really explain to people how crazy that divergence is because people's thinking is still, oh, we're gonna have a V-shaped reversal, and before you know it, I'm gonna go make it. Because in the past 10 years or 5 years at least, you Nvidia is down a few percent, or Microsoft or the S&P, you go make a sandwich, you come back and it's V-shaped. When that stops working, at some point people have to wake up to maybe, the world is more than just five stocks, right? My concern is not even fundamentally on all of this, and being a bit more open-minded and less just concentration. My concern is the concentration can snowball itself just as it did on the way in, but on the way back out, it can accelerate in that goes way beyond fundamentals.
Yeah. Oh, I mean, just think about the dollar falling, what that does to these foreign investors in the U.S.
Yep.
So they're getting hit not just because U.S. stocks are falling, but now the U.S. dollar is falling, and so I just think you're going to see a lot of foreign investors potentially come out of U.S. stocks, and I don't disagree. I think people underestimate how much foreign capital has come into U.S. stocks, and the U.S. Treasury does provide some insight, and it is a real number. It's a significant. I mean, just in general, almost 66% of the world's market cap is in U.S. stocks. I mean, China, it's like 3%. Does that make it? So I just think people. We kind of say American exceptionalism. A lot of this is just fund flows, and that's why I'm constructive. I mean, we've had a great run in Chinese equities, but I still think there's a huge lack of participation, and that's what gets me kind of excited over not just the next few months or quarters, but even over the next several years.
Well, I mean, if you look at it, like Nvidia has gone up how many hundreds of percent? If you look at the 1 year performance, so this is past 12 months, so year over year, Nvidia is up 32%. Mm-hmm. That sounds great. That is great. Apple's up 40. KWeb is up 60. It's year over year. That's 1 year. So people are just now waking up to this. And you and I, before we started rolling the camera, we're talking about this is not something new. We talked about this now. You and I have been talking about it on camera for I think almost a year now, not quite, maybe 11 or 10 months. So again, it just begs the question: when do people open up this? But I think a great takeaway that I hope people heard what you said before, which is once, if and when, I'm assuming it's more a when rather than if, Trump goes to China or they cut a deal or some sort of a trade thing, that might be at the latest when you start seeing. The question is, at what point does that get priced in? Right?
Yeah. And I mean, I think in the Western media narrative, particularly on the previous administration, was really driven by a defense narrative, and the media kind of parroted that U.S. government narrative, which I think it's a great disservice. And I actually, I'm forced to look at the headlines of the big financial publications, but I've actually canceled my subscriptions because I just don't believe that. I think they're driven. They're what they publicize is driven by, are they ultra left or are they ultra right? And their job is not to tell you the truth. It's not to deliver the news. It's to deliver a narrative. And I think they're heavily influenced by big government spending and that narrative. And, that's where we go to China and we talk to the companies. And, we see and experience what's happening there, and it's just incongruent. And I think the financials of the underlying companies prove that. I mean, if you look at a lot of these companies, if it's the Alibabas or JD, or these companies are showing something is going on there. JD just announced that they bought 8% of their shares outstanding last year. I mean, I mean, it's just a remarkable that these companies think they're so inexpensive, and yet no one else really cares because they're all in Mag 7.
Yeah. No, it really is fascinating. So, how do you see this going forward? I mean, we talked about the sort of the fund flows, right? We talked about potential for more stimulus coming out of China. I mean, is there even a way to for I guess this goes right back to fund flows, right? So we can't give recommendations here. That's not the point, nor we do politics. This is really about making money or giving people an
Yeah,
ideas, right, through the lens of education. But I mean, and we're not saying dump all U.S. stocks.
no,
I love those stocks. That's not the issue. Is the question is, are we talking about the company or are we talking about the stock? Right?
yeah,
There are two different things. I'm not even sure there is an orderly way for once this snowball gets going and people. So some of the largest holders of Nvidia are, like you touched on, the sovereign wealth fund of Norway, Swiss National Bank. Like, when they get out of these things, in even if it's just a little bit, like algos pick up on it. So I'm a bit concerned about that. And so my concern for the retail investor, for the at home, depending on, there's investment advisors and people who listen to this as well, is that they're waiting for an even bigger move. And then at some point you're just going to start chart chasing a vertical chart. And maybe getting out of your Nvidias at the worst possible time. I don't know how you see that, but it seems increasingly difficult to see an orderly reallocation of this.
yeah. It'll be interesting. I think there's is there a Fed put? Do they cut rates and to try to keep this going? But I think ultimately there is a consequence for some of the rhetoric that there's national pride outside of the U.S. and I think some of that money will come out just because people will say we're offended, or we've had a good run and now we have an excuse to take some profits. And I'm in the same boat. I have very large positions in U.S. equities, and I hate paying taxes, and
Sure.
I don't want to sell. And but at the same time, I'm definitely not reallocating new capital there. And that's been my counsel is we're invested in a very volatile space, Chinese equities,
Sure.
and you got to volatility adjust that position. But how do you not take a smidge of these great profits? And it's interesting, Serge, because I think what where a lot of the China money went besides Mag 7 was India and Japan.
Yep.
And it's remarkable to see how poorly India has done since China started stimulating. And it just shows that I think, particularly within Asia, that money's coming out of that market, coming back into China. Japan hasn't done nearly as, it's not down double digit like India, but it has struggled a bit and on a relative basis. And I think that shows that there is flow, there's money in motion as we speak.
Yep. There definitely is, and when you talk to international investors or even institutional investors, I think there's a very different tone that I think a lot of people don't hear, right? Which is, again, that there is opportunity outside of those stocks, and and so we'll see where it goes. But I mean, so far so good, Brandon, and I know we all appreciate the insight. I think about it as you say. Use the word smidge. And I don't want to draw the correlation to Bitcoin because it's obviously something totally different. But I always say, and again, not a recommendation, but through the lens of education, why not a smidge in something like that? It's it's a diversification thing, and it's a similar thing in China. That's kind of where I come from. Diversification. I mean, that's really at the end of the day.
Yeah. I mean, I would say, like, listen, it's to some degree you're already invested in China. That a lot of these big U.S. or European multinationals, you're getting, they're deriving a lot of revenue from China, obviously the Nikes and Starbucks and Boeings, and certainly in Europe, particularly Switzerland, big pharma, Volkswagen in Germany. But regardless, yeah, there's, you'd simply say the equivalence in China, just looking at, say, the US tech versus China tech, it's just a valuation disparity. I mean, how do you not look at that and think about what are some of the repercussions? And I think that's again why I'm so constructive on the space. And again, certainly we know Trump will be tough. As we're seeing with Mexico and Canada and with Europe, he's going to be tough, and he's going to ratchet up the rhetoric, which will bring some volatility. At the same time, I think China is stimulating. I mean, that's just black and white. And again, and I do think the rhetoric, it shows his willingness to do a deal. And I think he will go to China. And I think he'll get a great deal on behalf of the American people, and China will want to do it so that they can pivot and really, really dive into stabilizing real estate in China, which is an issue.
Is an issue, and so the way you're thinking this through is that might be something that would open up more investors' minds to maybe allocating a little bit more or some into that market. That's kind of what you're.
I think for a lot of institutional investors, the geopolitical narrative prevents you from coming back into the China. Again, you should, but you can't because it's career risk.
Yeah.
Some of this narrative out of Washington D.C. and it's mind-boggling because the U.S. and Chinese economies are so intertwined with one another. These people who say, "Oh, China's uninvestable," they're up to their eyeballs in U.S. multinationals that are geared to China. I mean, just think about Tesla or Apple or even ExxonMobil. That they say, "Oh, we can't touch China," but you're going to own Tesla, which more than 25% of revenue is coming out of China, 16% for Apple, 12% of ExxonMobil. You're telling how do you it's just this media narrative is going to change. Because I think Donald Trump hates the traditional media because they hated him, but then also I think they'll have no choice when he goes to China and does a deal. I really think that happens over the next year.
Yeah. I mean, it certainly seems like it. So that's the next catalyst we're looking for. Let's see Trump goes to China or vice versa, and we'll see what comes of it. Brendan, thank you so much. This is about as good a spot as any to put a bow around it. I really appreciate you coming on as always. I know our viewers do as well. And let's see where it goes. But so far, so good, and we'll keep our fingers crossed for more.
Yeah, thanks again, Serge. Thank you.
Thanks, everybody. Again, that's Brendan Ahern from Crane Shares. And if we're lucky, he might come back another time. We'll see. And until then, be well. Hey there. I hope you found this video helpful. Now, please make sure you click up here to get much more of our great videos, our great insight into the markets, analysis, and excellent interviews with professional traders and investors.